All right. Good afternoon, everyone. Thank you for joining us today. We appreciate your time, taking it out of, if it's like ours and our host today, your busy work day to hopefully learn a little bit more about things that you can do with your self-directed account, and especially with an investment like this. I am Kyle Moody. I'm the business development manager with American IRA. So, as always, it's a pleasure to be here with you today. A couple of housekeeping details that I'm going to let you know about before I turn it over to our esteemed guest today. This presentation is for educational purposes only. American IRA, headquartered in Asheville, North Carolina, is a neutral third-party administrator on behalf of the custodian New Vision Trust Company, a state-chartered trust company based in South Dakota, and does not offer investment advice or endorsements. We are not responsible for statements made by others. References to we and us refer to American IRA. We encourage you to do your own due diligence and consult with qualified professionals before making any investment decisions. One other thing I'll let everyone know today, if you are joining us, we're going to take questions at the end and present those to our guests. So if you'd like to type those into the chat, I will be keeping an eye on those, and I will present those to him at the end of his presentation. But without further ado, I want to go ahead and turn it over to not just a guest that we have today, but this is someone who I've had the pleasure and the ability to have good referral business with, call him a colleague, and I tell you, at some point, I almost call him a friend with the number of years that we've been able to pick up the phone, get each other on the phone, text each other, and be able to, most importantly, help the most important folks, and that would be you, the clients that we have. So Charlie Wessel, who is the principal with Cordell Capital, I'm going to turn it over to him today. He's got a great presentation for you. I'm going to sign my camera off here, and Charlie, it is all yours. Thanks again for being here.
Thanks, Kyle. Yeah, and I'll go ahead and share my screen to our presentation. Yeah, welcome, guys. I have been sending some of my investors to Kyle Moody since, I believe, 2018 or 2019 when we started doing that. Sending guys over to him. He's been taking good care of people for a long time that we've sent over to him. Matter of fact, my next door neighbor is with him and has invested with us through American IRA. But yeah, guys, I'm Charlie Wessel, with principal of Cordell Capital, based here out of Charleston, South Carolina. And yeah, I'll dive right into the presentation just about diversifying the investment opportunities that you have with your self-directed IRA. Okay, I guess I'm gonna have to click instead of using my arrows. Like I said, I'm Charlie Wessel, principal of Cordell Capital. We've been doing this since 2016. You'll notice I'm not a professional presenter by the many times that I say throughout this presentation. I'm used to talking to people on the phone and sending them emails and stuff like that. But I do meet with plenty of investors here in Charleston. So if any of y'all are here in Charleston at any time, please reach out. Love to have lunch, or I play a lot of golf here. We're a member of a golf course here. So if you play golf, we can definitely get out and do it. Anyways, we started here in 2016 into the multifamily investing space. And I started this company really to help out my friends and family because I was receiving really good returns on investment opportunities that we were taking advantage of outside of the stock market. Like many of you, the reason that you have self-directed IRAs is to kind of diversify, not just take away from the stock market, but also, diversify in different avenues, including that as well. But I have lost plenty of money, enough money in the stock market that I needed to get out, go find something else. So we found multifamily in 2016 and some commercial buildings. And that's been a really good avenue for us. I have been married for this year will be 24 years. I have twin 11-year-old girls and a 15-year-old son. And right now, if any of y'all have kids in school or grandkids or whatever, there's a lot of end of the year activities going on. So I was there this morning. I was there last night for a varsity baseball banquet for my son. It's just a good time of year. You know, the kids are excited. They're about to get out of school. It's beautiful here in Charleston. Anyways, what sets us apart is our commitment to our investors. You know, that's not just the opportunities that we present, but also, you know, we like to know what else you're invested in to just kind of see what you know what avenues might be best for you, and you know what's going to be the most advantageous to your portfolio. Um, you know, we're big on communication here, so we like to talk to our investors on the phone. We send out lots of email updates on our properties, you know, distributions and stuff like that. So whether you're right now, our opportunity is just for accredited investors, but that goes back and forth depending on the investment opportunity that we have on hand at the time. We usually try to stick to 1 to maybe 2 opportunities at the most at a time. Yeah, and right now we have over 1,000 units of multifamily, just about 37,500 square feet of medical office space, and 70 short-term unit rental properties. So why are alternative investments becoming so popular? What a debt validation fund is and how it works. That's the opportunity that we have available right now as a debt validation fund. Why is this investment a strong fit for your long-term retirement portfolios? And why use your self-directed IRA to invest in alternatives like the DBF that we have right now? The debt validation fund is what the DBF stands for. Volatility and limitations of traditional investments. That's probably why most of you guys have a self-directed IRA, is because, like myself, I'm sure we have all made some money and lost a lot of money in the stock market. You know, with the volatility, market swings, it's just it's been very frustrating over the years to myself. And that's why I sought out alternative investments. And really, they call them alternative investments. It's real estate. It's been around way before the stock market has. So really, in my mind, the stock market and all that stuff, that should be the alternative investment. I mean, you know, people have been renting real estate to people since cavemen. So investors want to diversify. You know, it's always good to have many eggs in that basket, to bring forth different yields from different investments. Real estate, real assets and private debt funds are gaining popularity. I see in the private equity space that I'm in that there is a lot of debt funds out there right now. There's debt funds for all kinds of different things, from house flippers to people buying real estate that want to lend from a debt fund as opposed to a traditional bank. There's a lot of different, you know, alternative assets out there that are backed by real assets. And that's definitely makes you sleep better at night. So what is our debt validation fund and how it works? It's structured for a fixed return. Our debt validation fund focuses on accounts receivable financing collateralized by pools of receivables. Our investors share in the fund by lending money to one company, in this case called Resolution Processing, which uses legal processes to invalidate consumer debts, especially credit card debt. And that's from illegal collection practices from these companies that are going after individuals. It's a high yield strategy. Investors are receive predictable fixed returns at 20% APR, paid out quarterly over a defined term. We have a 36-month term on it, but we don't really see this company needing our money that long. Possibly the next 24 months is probably how long this will last, to receive the 20% APR. Impact driven investing. The fund helps individuals, including veterans, first responders, eliminate credit card debt ethically. So what we are focused on in this debt validation fund is eliminating the credit card debt for veterans, first responders, active duty military. We're really strong into those guys. Over the past several years, the economy, with everything just being so expensive, we've really done a lot of research on this before we got going on it. And these guys are not running out buying Corvettes. They're trying to feed the family. And they don't make a ton of money. I even have some pretty high-ranking retired military guys in our neighborhood. And yeah, they do, they have a nice pension, but they're all working jobs right now after they retire. One of them's he retired a general, and he's working a consulting job right now, and he makes way more money now than he did even in the military. So we're really focused on helping these guys get out of debt and help ease their life a little bit. So DVF investment is a strong fit for long-term retirement portfolios. The debt validation fund, strong fit for long-term retirement portfolios because it offers the stability and predictability that many investors seek as they plan for the future. It's 20% annualized return paid out quarterly. We've made a couple distributions already. The guy that I partnered with, he already had debt validation fund one that he did for just over a year, and I wanted to wait to see how that panned out before we partnered together on this one. We're pretty conservative with what we do with our investors' money. I can lose my money in investments, but I really, really can't lose my investors' money. So we wanted to make sure this thing was panning out. My partner in the deal is he's a forensic CPA, so he dug into their books really, really deep. He's known the guys that started the company for years, so he felt very comfortable with these guys. So anyway, this definitely complements the long-term growth objectives of SDIRAs. The tax implications on this is really good for SDIRAs because this isn't one of our real estate deals where we get a lot of depreciation. We actually get no depreciation whatsoever. So, you are looking at short-term capital gains on this. So it really helps out with the SDIRA investors. So it's a passive structure, makes it ideal for retirement accounts. No active management, no tenants, no property oversight, just reliable quarterly cash flow. Because the fund supports debt resolution for veterans, first responders, and military family. It really aligns with our value-based investments. Even in the apartment deals that we've done in the past, we have like book bag drives for the kids. We have big cookouts for the families. If they're struggling financially to pay the rent, all of our property managers, they're able to work with our tenants as well. So we really look for, we have strong values in what we invest in. So why use your self-directed IRA to invest in alternatives like DVF? Control and flexibility. Unlike traditional IRAs, SDIRA allows you to choose from a wider range of investment options, including real estate, private equity, and debt funds like DVF. That's kind of why you guys got into the SDIRA game. And Kyle's been helping our investors out with that for many years now. It's ideal for passive strategies since DVF provides quarterly passive income with minimal hands-on involvement. It fits well within the framework of the SDIRA. Tax deferred or tax-free growth. I'm not a CPA nor a lawyer, so I'm going to stop that one right there. Definitely make sure you check with American IRA or your CPA to make sure that this definitely fits with your uh, your tax strategies for investing. It's just a simple process. Partnering with a custodian like American IRA streamlines the setup and compliance, making it easier to deploy capital into alternative assets. We actually do work with several different SDIRA custodians. Um, there are a couple of them that really make it difficult, and American IRA has made it very easy for many of our investors. Probably one of the easiest ones that we work with. So that's about it. My name's Charlie Wessel. If you have any questions or inquiries, please reach out. That QR code will take you to a page where you can sign up, and we can schedule a time to talk if you'd like and get some more information. That number at the bottom, that's my cell phone number. I mean, I give that out to everybody. It's I'm very reachable. So if you'd like to chat about any of it at all, please feel free. And I'm pretty sure that Kyle's going to be sending out this video to everybody, and I can even send him this presentation if you'd like to. If you'd like more information, just reach out to us. We're always available.
No, thank you so much, Charlie. We really appreciate your time. I know that having you come on, I mean, it does take time out of your day as well, but it's great to have a vehicle for folks to be able to use their accounts to invest in like this. There's lots of different things that someone can do with a self-directed IRA, but they may say, look, I don't want to do any more real estate. I've had enough years of that. They may not have, borrowers out there that they're looking to lend to, and they may not have, um, they may not, be getting into precious metals. So this right here is another, avenue for them to be able to use their account. So we appreciate you telling us about that. Really quick, one of the things, a question here for any of our clients that are listening, for anybody who's thinking about becoming a client, they hear me on a sales call. They'll talk to, our office about certain things, but what tell them a little bit about what things are going to be like on Charlie Wessel's end, on with Cordal Capital, what it actually, how that investment, if they're wanting to say, hey, I want to invest in this, what are some things that obviously they're going to speak with you and your company, then come back to us and say, hey, look, I am looking to now make this investment. Tell me about, or tell our audience here, maybe a typical conversation. If you can have some kind of applicability in what one of your calls may look like, questions that you may have fielded over the years that might be able to kind of, that they may have right now that you can go ahead and tackle.
Yeah, for sure. I mean, if they have returns coming back from a, oh, maybe did I lose you? You there? Oh no, there it went. All right, my screen just flashed on me. So, if they have returns coming back into their self-directed IRA or from, cash that they put into a real estate deal, do they have depreciation in that? Do they not? I mean, that's one that would take the investment away from American IRAs, their account in that. But like stuff like this fund here where there's no depreciation, I mean, I've steered people towards using a self-directed IRA that have not in the past. even though they're accredited investors, which to me, every accredited investor should have a self-directed IRA account. It just helps so much with their retirement planning. That and what are their goals for their for retiring, and what's their what are they looking for returns, like an average annual. Are they looking for just put it in something and not worry about it for a few years? I mean, those would be more of like the development deals, as opposed to any passive income deals. um Things like that. As far as setting up anything with us, I mean, it's very easy. We have a portal that they would log into. They would type in all their self-directed IRA account details. In that portal, there's going to be our webinar that we've done on the specific investment. So there'll be usually a 30-minute. We try to keep them at 30 minutes because I don't like watching webinars over 30 minutes. So yeah, a 30-minute webinar on the specific investment. Any kind of Q&As that we'll have that we've typed out to put in there. Any other information that we have, we really dig down and do our due diligence on every investment that we do. So a lot of that is in that portal. They could log into the portal, enter in all their information. They'll get, they invest into the portal through, they'll ACH it from American IRA over to our checking account. They can watch their distributions in the portal. All of our monthly emails go into the portal as well. So that way they can go back and look at all that as well.
No, man, that's great. You actually gave me some information there as well. I won't tell people what it's like on our end. I always defer to the company or to the asset end user for them to really give the breakdown. So that really is cool. Thanks. We've got three other questions here, really quick. Two of them I'm going to break down into one question. I'm going to hit that one first for you. What is the minimum investment and what is the minimum length of investment? So if you can touch on those two questions, and then I'll, unless we have any other questions, I'll wrap up on this last one here after this.
Yeah, our minimum investment is I say always, it's usually 50,000. We have had a couple of them that were 100,000. But most of the time it's 50,000. This particular one here is 50,000. The length of investment, we have a 36-month term with this company, but it's probably going to be 18 to 24. 24 months before they say they don't need our money anymore. So I mean, they're paying us 30%. They're me and my partner are splitting the 10, and then we're returning the 20 back to investors. That's about it. And for this particular one, you do have to be an accredited investor, which means that you make $200,000 or more a year filing single, $300,000 or more a year filing jointly, or you have $1 million net worth, not including your personal home.
Follow up to that, I believe you noted this earlier, and you may have said this in this. Do you need to be an accredited investor? Are you only taking in accredited investors?
For this specific investment, yes, we are. Yes, this is just for accredited investors. And you would need to get that, and we can send out a sample letter to anybody that they can forward to their CPA, licensed CPA, or a lawyer. And their licensed CPA or a lawyer can look at this form. They can either fill out the form we send, or they can create their own and send it back over to us to verify the accreditation.
And one last thing that I have here, unless another one sneaks in on us, Charlie, can you walk us through a successful case from your fund, how you sourced the debt, validated it, and delivered returns to investors?
Yeah. So how this entire thing works is this company needs to buy leads. And these leads are pre-qualified leads that they know have credit card debt at $10,000 to $40,000. And what they do is they're then going to, the lead company already knows that they have been contacted illegally by these credit card companies or these lenders. And we then buy those leads for $1,500 a lead. And our the company that we're lending to, it's a company of lawyers, and so they go out and they send letters to these credit card companies and basically invalidate the debt. They wipe it off their credit report. They've been doing this for a while, and they're pretty good at it. So the margins that they do charge, anywhere from 20 to 30 to 35% to the person with the debt to clear this debt and invalidate it. So those are pretty big margins. So they don't mind paying us 30% on their money. And they're buying a lot of these leads. Now, one way that we're kind of protected in this is that when this company buys a lead for $1,500 that we gave them to buy this lead, what these people that are in have the debt do is they pay monthly for like 2.5 years to this company. And if they miss any payments in the first 3 payments, we send that lead back to the lead company and they refund us our $1,500. Well, they refund the company the $1,500 and then they just go buy another lead. So usually when people have skin in the game by paying $300 a month and they're in it for $900 already, I mean, they're usually going to keep going. So that's one protection that we have against our investment.
Well, Charlie, I know that you need to get back to your thing. Again, we appreciate your time. I think that takes care of all the questions we had today. I do appreciate the questions. I like when folks are engaged. It was a great presentation. You're always welcome to obviously reach out to Charlie over at Cordell Capital, and he did have his information up for any of you who would like to see this presentation again, to see if there was anything that you missed. We will make sure that this post recording will come back out to you. If there's anybody else that you want to forward that on to in case they couldn't be here today, by all means, when that link comes out, you're welcome to do that. Again, I'm Kyle Moody, Business Development Manager here at American IRA. We do appreciate all of your participation today, especially here in the middle of the workday. So with that, we'll go ahead and sign off, and we look forward to seeing you again next week when we will be joined with by Ryan Hughes with NRL, and he will talk to us about non-recourse lending inside of a self-directed IRA. So everyone have a great holiday weekend this weekend. Be safe, and we will see you back same time, noon Eastern, next Wednesday. Thanks so much.